You guys are the survivors. I congratulate everybody. You lasted 3 days. Let's see, how many hours? How many hours is that? Almost 9 hours. 8 hours. Wow. That's a long time to listen to somebody like, wow. I'm tired of myself. Okay, let's go over a couple of things. First of all, in the euro currency, obviously the market, I canceled that order about 20 minutes afterwards, the rest of it, because obviously the market made a good C-up. There was no reason to keep the order in. I got out of it. Right? Just nothing happened. Next thing, in crude oil, later in the day, okay, the market started coming off. But obviously I wasn't looking for a late day trade to fade. I was looking for an early day trade to fade. On top of that, if you read the logical trader that Joe wrote today, 26.35 to 26.53 is a pivot on gap day. I'm not going through that in this class, but that was an area where you'd want to get out of your longs or whatever the case may have been, or an area of resistance. And lo and behold, 26.38 was the high. So again, and if the market would have collapsed later in the day, okay, and if it would have gone down, it would have been a late day point C pivot to the downside. I definitely wouldn't want to gone ahead of that freight train. So that's the next order I canceled. One thing I want to clarify is, okay, with the S&Ps, okay, a couple of things. There were a couple of things that happened today in the S&Ps that actually added to my confidence level in the trade. First of all, do you know that Globex, the order matching system for the electronic minis, has been down all day? It's first going on at 3:15, which means all these people, since almost about 10:45, have been shut out of the marketplace. So there's 1 hour for them to do what they want to do, as opposed to 3 hours, okay, or 4 hours. That's the first thing. The second thing is, so I'm hoping, and once this plan lands safely, I hope, okay, that this point C pivot trade is going to work. But as the market started coming back and coming back and coming back, I said, oh my God, all these people from Globex are shut out, all these AGs are shut out. So the trade that I put on already is, I bought 6 big S&P, which is 30 minis. Where did we buy them at, Joe?
913.10.
We bought them at 913.10. We bought, on a stop, we bought 40 big ones, which is the 200 minis because it's a 5-to-1. What is it? 5-to-1, right?
Yeah.
So we bought 200 big ones at 916.5, right around here. Okay? The stop in the whole trade, once the market made the C-up, is below the D. We put the stop in at where? 912 what?
912.70.
Okay. Okay? And if we get stopped out, so I get stopped out. I lose $45,000 and call it a day. This is a good trade. Okay? If it happened later in the day, it's a point C pivot. Obviously, I'd like to see the market get away from the 16 area. You know what I'm trying to say? But again, this is a good trade because it happened late in the day. Everybody from Globex is going to turn on their things about 3:15. Hopefully, President Bush goes zwing, right, and not zwung. Okay, and that'll take out some uncertainty. Okay, we have the GDP coming out tomorrow with the unemployment numbers and everything tomorrow morning, right? So and we're only what's the 45-day high? Can someone look at the pivot sheet that we did? Go to S&Ps. Tell me what a 45-day high close would have to be today.
923.70.
What?
This week's high.
What is it?
This week's high. 923.70. It's this week's high.
923.70 would have to be that. If we get above there, that would be a 45-day high close. It actually would probably be more than a 45-day high close, but in reality, at least it would be a 45-day high close. Okay? So again, I'm banking on, and you're good. I'm glad this trade happened. 1, because it's a good trade. 2, because I'm either going to make money or lose money. But even if I lose the $45,000, I don't care. Okay? Obviously, I care about losing money, but I care about making the right bets. Okay? This was a good risk-reward decision. Okay? Especially if the market settles above above 916, 917, 918, settles above there, because I'll carry part of this position into tomorrow, because if it's a late day, relatively late day point C pivot, okay, then I want to go home with that position going into tomorrow morning, because I told you, probability is 70% that the market gaps open higher. On the other hand, if I get stopped out, and unfortunate, and it goes down to 912, whatever the case may be, actually, shut the screen off. I don't want everyone to tick watch. That's one thing I don't do. I went out for an hour and a half. By the way, if you have a chance, there are great cookies. I found the place, okay? Down the block, all the way there. I took Joe's newspaper, sat there, read it for an hour, sit there, 14 messages, screw them. Okay, didn't answer the phone. Why? Otherwise, I become that addict. Go, 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 go. Think that thing machine's listening to me? Okay? Again, so these are the pieces of the puzzle. Okay? So we have a good risk-reward trade. That's what I did. And we're going to see how it turns out. And in the meantime, here he comes, Siegfried and Roy, about to fly in on the Abraham Lincoln. Next thing. But there's something I want to talk about. When I initiated the trade, the order that I gave, because I had to go to open outcry instead of going electronically because the electronic system was down, was I gave them an order to buy 40 lots at 916.20 with a 916.80 limit. Okay? Stop limit. Does everyone know what that means? Does anyone know what that means in this room? Does anyone know what that means? Okay, what does that mean? What 916.20 stop with a 916.80 limit? What I'm saying is, if the market trades 916.20, my order is elected, becomes a market order. Okay, but I don't. If the market runs away and the broker is unable to fill me past 916.80, 60 ticks away. Okay, don't buy them until the market comes back. Then, if I miss them and I don't get them, I don't get them. On the other hand, when I put the stop order in, well, let me just see where this is so I can see where the stop. I'll tell you where the stop is. Okay, when I put, where's the trade? 915.80, 916. Okay, go back. When I put the stop order in at 912.5, or whatever the price is that that we did, which is right below the D, okay, for the day, I didn't put a stop limit order in. I just put a 912 stop sell 46 contracts. Why do you think I did that? Why do you think on the initiation side I put a stop limit in, but on the liquidation side, a loser side, I just put a stop in? Yeah. GMO. What's GMO? No, because again, this is where I'm getting out. I'm not going to be cute about it. Trade didn't work. You got to get out. You don't necessarily have to get in, but you got to get out. Right? So the point is, in terms of trading this stuff, okay, especially, you can massage a little bit your entry points. Okay? Markets tend to come back. You see it over and over again. But you can't massage where you're going to get out if you're wrong. You can massage your profitable exit points. Okay? But you can't massage where you're going to get out. So while we're waiting for our Commander-in-Chief to miraculously appear, there's a handout that I gave you guys this morning. Okay? And we're going to go over some of the stuff that happened in the market. But there's a handout I gave you this morning, which was Gartman's 20 so simple rules of trading. Everyone have that? What time is it? What time is he landing? Less than a minute? Less than 10 minutes? 9 minutes after he's landing? You got the inside word. Not 9, right? I don't know. Okay. I'll wait. Louis, where the bonds close? Let me see where the bonds close. Bonds closed at 114 even. Okay. Go back. So, again, I told you I touted a gentleman's service called the Gartman letter, which is read by Dennis Gartman. He's pretty expensive. I don't know really what he charges. I'm not an agent. I'm not, I don't. But he's good. I subscribe to it. And he graciously allowed me to copy his 20 rules of trading, which I go over with all my summer interns, which I go over with anyone who trades with me, which everyone basically understands, because I agree with almost every single one of the rules. So if you will humor me, let's go over these things. Some of them are obvious, some of them are pretty funny, and some of them maybe are not so obvious. But they're simple. And again, simple things work. If simple things didn't work, Evan, who was up here, and Keith, nuts and bolts salesman, could never make a living. Okay? This is not E equals MC squared. This is not Harvard econometrics. Okay? All right? If you make it too complicated, who knows what it even is? So let's go. First of all, number one, never ever, under any circumstance, add to a losing position. Does that go along with what we said about ACD? We're buying strength. We buy scale up. We sell scale down. 1 for 1. Number two, trade like a mercenary guerrilla. Fight on the side of the willing, be willing to change sides immediately. I think George Bush wrote this one. Okay. We'll go past number 2. Couple of number 3. Capital comes in 2 varieties, mental and actual. The mental is this is good. The mental is more important and expensive of the 2. Holding to losing positions costs measurable sums of actual capital, but it costs immeasurable sums of mental capital. There it is. That's why that's why I don't look at the ticks, because all you do is expending mental capital. Right? You made a bet, okay? You live with it. Works, it works. It doesn't, doesn't. It's a business decision, right? Again, otherwise you're expanding mental capital for no reason at all. Next, the objective is not to buy low and sell high, but to buy high and sell higher, right? Buying A-ups, buying momentum, buying, moving average fake outs, buying number lines get to +9, right? Buying first out lows, not buying low and trying to sell higher. In bull markets, one can only be long and neutral. Seems kind of simple, but in bull markets, everybody wants to fade things. Okay? If you have those slope with those 3 moving averages, and they're all, right? Nobody likes, you see, everyone likes to be different. And I'll tell a story about Joe, right? Joe should have been playing football, okay, for a big Division I school. Look at him. Big guy. Oh, you won't even look at this, okay? Okay, there he comes. Ew. Right? Is this like a movie? Is this like real? What? There he comes. Oh, please don't crash. Did he just do a flyby? What do you think he is, Tom Cruise in, what? Oh, come on. They probably got like a string between the two blades, right? Are you kidding me? What? This is pretty cool, actually. Is Kate Smith here? Bob, did you call Kate Smith back from the dead to come and sing God Bless America? Her daughter. All right, well, we're mesmerized by this. Okay. What? Right. Where is he? Now that he disappeared off the screen. Oh, come on. Would you please land this jalopy? All right, while we're watching this thing, okay, in bull markets, we can only be long or neutral, okay? Which means everybody loves to be a fader. What I was talking about Joe is, Joe could have been a great college halfback. He played for Chaminade High School, one of the best programs in the state. He was the lead running back. He had guys in high school that were 230 pounds that made Lewis, stand up Lewis, that made Lewis look like a midget. The problem was, he didn't want to be, he wanted to go against the grain. Just like people in moving averages want to sell it. The play was an option play right, everyone would go right, Joe went left, right? Okay, he just figured, no, I'm going to go by myself. That's why he didn't play the big Division I football. Again, and people are the same way. Sorry, Joe. Okay? People are the same way. People don't want to do what's easy. They want to do something to go against the grain. So again, even though it seems simple, could you please land, what is going on here? Okay? Even though it seems simple, okay, again, moving averages are sloped up, number line is positive, okay, I'm looking to A-ups, I'm looking for excuses to buy, not looking for excuses to fade. Okay? If I get a sushi roll down, a 5-day reversal, I'm getting out of my lungs, maybe then. But 9 times out of 10, those moving averages are sloped up, DSI divergences, fundamental news I'm agree with, boom, I'm looking to get long. I'm looking to join the crowd or looking to get into that thing, not to fade it. Next thing. Markets can remain illogical longer than we can remain solvent. Okay? I don't know. That goes back to the thing, markets, how high is high, how low is low, nobody knows. Next thing, sell markets that show the greatest weakness and buy those that show the greatest strength. There was a famous trader. His name was Richard Dennis, or he is Richard Dennis, he's not dead, okay? Richard Dennis used to live by this. He would go ahead, and every day, an hour afterwards, when the markets were really rocking and rolling, he would pick the commodity that showed the greatest amount of relative strength an hour after the opening and sell it. He would pick the commodity in a dollar-weighted type of thing like we did before, a dollar average, a dollar risk thing, and whichever the commodity showed the greatest amount of strength, he'd buy it. And people said, how can you buy this extension and sell this extension? You're giving away such a, the market's already moved. There he is. Are they doing another thing? All right, Lewis, everybody wants to watch. Turn on the volume. Shut me off. They're going to drop him out of a parachute? No. Where is... Lewis, put the S&Ps on.
They're rallying a little.
Okay, go back. Oh, my God, this is like insane.
The president's airplane right there, they're pulling a beam. They're going to be about a mile to a mile and a quarter along the port side of the ship. Now, they're heading in the opposite.
Anybody wants to stand up and salute, it's okay with me. I mean,
Once they pass what's called the beam.
Okay, well, just keep it on, but just shut this guy off. Okay. Try to trade the first day of a gap for gaps usually indicating violent new action. Actually, that's something that we don't go over in this class, but actually we do. Okay? If the market, in any market, whether it be, Sun Microsystems, whether it be something else, has a substantial gap, and it's unfilled, which means everyone is, to some degree, is caught who was involved in the prior PAX action. And it's unfilled for 3 trading sessions. Okay? You'd want to get involved and get on the side of that gap.
He just
Did he make
landed.
it? There he goes, smashing right up the end. Oh, he landed. Is that him? Let's see. Watch what happens. Go back to this. If this thing rallies on this, I'm going to kill myself. 916 and a half. All right, we'll shut the shutter off.
Make sure it's him.
It's not him? Okay, Lewis, make the voice louder. Let's make sure it's not Dick Cheney in disguise. Can you imagine? You know Saturday Night Live is doing a whole piece on this, right? Right? You know, right?
We talk about Air Force One and Navy One and Marine One.
By the way, he's the greatest. Anybody watch this guy on TV? Fox News? Oh, who's this guy?
Shepard Smith.
What? No, this is not O'Reilly. Who's this?
Shepard Smith.
Shepard. He's good.
One, in this case today, Navy One, bringing the president.
You know?
He's been on 3 different.
He didn't land yet? Who's that guy?
Today started out on Marine One, then on Air Force One, today on Navy One. So just 3 down, 1 to go, I suppose, Captain. And this should be the president himself.
I was Dick Cheney.
And difficult to believe. We're going to shut up and just listen to this one. How about it?
Okay. Look how slow that thing going. If the market rallies on this, I'm going to kill myself. What wire did it catch? He's in the building. Okay, let's shut this off. He landed. Let him wave to everybody. We'll come back to him. Lewis, let's see. Did it rally? No. Good. At least Mark's not that insane. Okay. Go back. We'll keep the picture up for you guys. Keep the picture up. So for those of you who are bored of me after 3 days, you can watch him. He's more entertaining anyway. Okay. So let's go further. The gap system, the gap we talked about, unfilled gaps after 3 days indicate people are caught. Okay? People that are caught, right? You want to go with that gap. Trading runs in cycles, some good, mostly bad. I would agree with that. Okay, yes? Let's assume that crude oil closes tonight at 26.10, and tomorrow opens up at 26.50, and the high today was 26.38. So you have a gap higher opening, and you have and the low tomorrow is higher than yesterday's high. So you have an unfilled gap, and 3 days later, the market's not traded back into the prior day's range. You know, so it hasn't gotten back into that 30-day range. It just now it's trading 27.50. What ends up happening is those people who were short from that first day have never had a chance to get back their chips. That's an unfilled gap. So if it's open for 3 days, okay, that's another bullish indicator. Okay, in that case, or you can use it as a bearish indicator. By the way, there are a lot of stocks, if you look, that have left unfilled gaps in the past 3 weeks up. Okay, U.S. Steel. Okay, a lot of the mom and pop stocks have done this. Okay, unfilled gaps. When the gold stocks first took off last year, they left unfilled gaps. Okay, so again, I really am not a technology person. Okay, I really don't know. I can't even run a computer. But the point that I know is that unfilled gaps are another sign that people are trapped. And every time people are trapped, that's when you want to capitalize. Next thing, to trade successfully, think like a technician, think like a fundamentalist, trade like a technician. That's me. Put all the fundamentals together, do all my research, match the technicals up, boom, and that's it. Okay? Next one. Respect outside reversals after extended bull bear runs. He kind of gets the idea that outside reversals, those are those 5-day rolling. He talks about them on a daily basis. Okay? Okay? But I look at weekly, okay, and monthly, which is exactly what he talks about here. I gave him that one, by the way. Keep your technical system simple. Right? This guy's my biggest fan. Right? MACD, moving average oscillator with a 4-day exponential over a 20-day this, you know. It's all nonsense. Put the Lewis, let's see. See? Nowhere. Good. See me not opening. Oh, it's even better. That's even better. You know why? Because now all those guys who thought that they'd be able to trade minis in the day won't be able to. Go get Mike on the phone. Got to buy another 6 lot on that. But what? No, they're going to get out to the futures market, but they don't even know how to trade open outcry. Most of them are just junkies on the machine. That's number one. The second thing about it is, if you ask 9 people out of 10 what the Euro Stoxx 50 is, right? They're going to look at you like he looks at me. You know? What? They close at 2 o'clock. Thank you. Rich. Mike.
Yes, Mark.
Okay. They're not opening Globex?
Not until further notice. Still having problems. Access has been delayed as well.
Okay, get the S&P on the phone.
On my way.
What?
Why would access be delayed?
What do you mean?
Our access.
Who knows? Our access? I don't know why. I don't know why our access.
Our access should be open.
Yeah, probably because of the minis. I don't know, because of the minis. Yeah. Because if people haven't been able to get back their shorts, because one day is not enough, you know, again, this is what he uses. And I decide, well, I don't know, maybe it's 4 days, maybe it's 2 days. Hold on. Mike,
Yes, Mark.
what's the quote?
I'm getting you a quote as we speak.
Mike, what are you doing?
Where is it? It's 916 even bid at 916.30.
How many lots am I long already?
You are long 46.
Okay, just buy 4 more, round it up.
By 4 more, making it 50 lots.
Yeah,
long.
buy 4 at the market, make the stop 50 lots.
Yes, sir.
Call you back, hang it up. Okay, yes. Yeah,
Put the TV back.
And it runs quite a bit.
yeah.
You do tend to get an exhaustion gap which starts to end at that particular run.
I'm exhausted too. Yeah. But I'm keeping this as simple as I can because I don't want to get too complicated.
It looks like a mess.
Next thing. Respect, expect, and embrace the very normal 50 to 62% retraces that take prices back to major trends. Okay, well, let's talk about that. Okay, what I look for when those retracements take place in a bull market or in a bear market are those moving average fake-out trades. I look for the number line sometimes to reset back to 0, like it did in crude oil, okay, and then go back to a positive 9, like it did. Okay, those are my ways of going ahead and buying these retracements that he's talking about here. Next one. In trading, investing, an understanding of mass psychology is often more important than an understanding of economics. Absolutely. Absolutely. Understanding how people react, understanding this concept of movie theater people, of screaming fire in a crowded building, all this stuff is much more important than sitting there going, going, well, the supply-demand statistics are, natural gas should be trading only $4, but yet meanwhile it's printing 10. I don't understand. Okay? Psychology is much more important than economics when it comes to this stuff. Establish initial positions on strength in bull markets and weakness in bear markets. It's the same concept as before. Bear markets are more violent than our bull markets. That's because everyone gets panicked in a bear market. People are happy in bull markets. Bear markets, people get miserable. Be patient with winning trades and be enormously impatient with losing trades. Absolutely. The only way you can be patient with a winning trade is by shutting off the machines. The way, if I was losing money, okay, if I get close to getting stopped out, it doesn't really matter because what am I going to do about it? I'm going to wish, don't tick there, it ticked there. It's the most ridiculous thing I've ever heard. It's like, why me? What? Why me? That's like ridiculous. Okay? So the point is this, save my mental capital, put the trades on that work, and move forward. Next thing, 18. The market is the sum total of the wisdom and the ignorance of all those who deal in it, and we dare not argue with the market's wisdom. Let me ask you a question. If we were all in this room, and the market was going up, let's say it was, not the S&Ps, because everyone thinks in the, let's say it was, live cattle. Okay. Let's say it was live cattle. Let's say live cattle was going up. And all of a sudden live cattle's lock limit one day and it's going up. And all of us going ahead and saying to ourselves, why is cattle futures, why are they going up? And if I asked you, and you say, I have no idea. You say, I don't have a clue. We don't really know what's going on, right? And as long as it's going up and we don't know why it's going up, or we can't even reason why, it's going further. The minute we think we know why it's going up, it's time to get out. Okay? That's simple. Okay? Anytime anyone says, why is this going up, and they don't know why, believe me, it's going further than they think. Anytime the Einsteins of the world think they know why it's going up, right? Okay? Get out. It's over with. Okay? Next thing. Do more of that which is working and less of that which is not. That makes sense. This makes perfect sense in everything in life. Right? Not just trading. And, of course, like everything else, All rules are meant to be broken on occasion, because we're all human. Okay? No matter what I say, I still lose my discipline once in a while. I get pissed off. The TT machine doesn't work. All right? Let's see what he has to say. Is he talking, or is he just shaking hands? Take a look. No, it's that other guy. Go back to the S&P, Lewis. Are we in the same boat? Same place?
A little lower.
Uh-oh, I'm going to get stopped out. Okay? Again, I don't care. I mean, obviously I want to make money, but I'm here to make good decisions. And if I'm wrong, so I lose the money. If I'm right, I was going to make $150,000. If I'm wrong, I lose the money. It's okay. Okay, let's go back to George Bush. Okay, anybody have any questions while I do this? Because basically, the only other thing we have left to do today, okay, is to wrap this up and to go over any trading, anything that I've gone over in this class that you guys have questions on. Because again, I said this to you in the first class. The only question that's a bad question is a question not asked.
Was that his plan? He never told you.
Yeah.
Could you look at your thought process on a little longer term on the euro, because the euro had a plus 3 to 9
Right. Right. Euro went plus 9 today, you know, and to me, you know, I was looking to sell it. Okay. Again, fundamentally, I'm not bullish on the euro. Okay. Okay. So it's very hard for me to buy the euro, especially on this thing. But I know one thing: now that the number line's gone to plus 9 on the euro, I'm not selling anymore. I mean, it'll probably come off and have some violent moves. But guess what? Until that thing gets back to a 0, okay, no matter how much I want to sell the euro, I'm not selling it. I'm not looking to, you know, to do that trade that I did today, okay? Again, I'm not looking to make that, you know, to sell it below the bottom of the pivot, risk the top of the pivot, okay? I'm not looking for those situations because the market made a plus 9. And again, the market knows a hell of a lot more than I do. Okay? Next question. Yes?
What if your plus number line is very, at what point when the plus number line is far not as bad, how far would it take not to go through?
I don't do that because we tried testing. What his question was, let's say the number line goes to 0, goes to positive 9, goes all the way out to 35, and then comes back. You know, when do you get short? I don't do that. Okay, it's very simple. This way, I look at the trade. If I'm 0, that first time we get to plus or minus 9 is the time when I really want to step on the gas. Once we go ahead and get plus 9, we get to plus 15, we're there for a while. If the market's moving, I enjoy a position. If the market starts going from plus 25 to plus 15 and the market's still rallying, good. If the market's not rallying, maybe I could have my position. But I'm not getting short just because the number line is coming in. The only time I'm getting short again is when that number line, okay, gets to negative 9. Next question. Yeah.
Trace Cisco back and forth. Went back and forth from 13 and 15 like 5 times this year. Those other 4 times are bad. It's at 15 now.
Why are you trading Cisco? You're violating number 1 rule of this. What's the number 1 rule that we talked about first thing about trading this stuff? But, right, what's the number 1 rule? Volatility. Do you know him? Wait, go back to the S&P thing. Okay, go back to the thing. Okay, right? Why are you trading Cisco? The Cisco move, it's been in the range of 13 to 15. It's watching paint dry, right? Here, where do you work? Talk to him. He'll give you 14 stocks. You give him a little commission. He'll be happy to tell you 6 stocks that move. Right? Why would you trade Cisco? That's like trading. That's like death warmed over. You might as well go to the morgue and watch dead bodies. What are you doing? Again, you can't make money if the thing doesn't move. Right? Okay. Sorry for yelling at you, but Pete told me. Yeah.
On the website regarding stocks, you have all the
Okay, go to the website.
how do you determine which stocks you put up there?
We determine which stocks we put it up there. But if someone subscribes to the website and is a human being about it and emails us and says, you know, I really appreciate it if you could put these 10 stocks, not so much on the number line and the pivot. Usually within 2 weeks we get to do it because you know what? If it's a stock that someone's watching and it moves, we'll do it. If there's what do we care if we subscribe? So Lewis has to stay another half hour. Look at his face. That means I have to stay late. Overtime. Okay.
Mark.
So, yeah.
Several people have asked what they should do when they leave the class regarding the website and some further seminars that you might hold.
Okay, first let me get to this thing. I'll get that. Lou, go down to stock. Go. Stock. There's the stock number line sheet. Just to see what it looks like. You can everything's in PDF format. What does PDF stand for? Is that what it is? Okay. Anyway, so here it is. Look what we do. Enlarge us. Look familiar, Pete? Same exact stuff. Number line for stocks, right? Go back to the thing. You can pick whichever ones you want. You want to do this? We pick them because this is the basket we trade. And sometimes also, you know,
Louis,
just go eeny, meeny, miny, mo, go swing. Okay?
Stocks first 2 weeks of the year.
Okay?
Go to that.
We have stock 2 weeks. All right, hold on, wait, stop before we go up there. Go to stock pivot. Lou, you gotta make that. There it is.
The A.
High, low, close, pivots, the whole thing.
A up.
A ups, everything. Momentum, which we didn't go over. Close 7, close 6, we didn't go over. Those are all a little too complicated. It's all there. Yes? That's your own, you know, one thing, that's a good point. The one thing I did not touch on in this class, because it's a little too complicated to do in a 3-day class, is money management techniques. Okay? I did talk about unit theory, about how big to bet in terms of general things, but I haven't really talked about this thing. In terms of this, if I'm a trader, I would never want to risk more than 2% of my capital on anything. On anything. Okay? Right. That's a discussion that you have to have, but that's not a discussion for the, you know, this thing. But you're absolutely right. You know, that's what we optimize all the time. And to be honest with you, that's where I'm the weakest. Okay? That's where most people are the weakest, who are pretty good traders, because again, you know, I just added, I bought 44, I bought 6 more just to round it to 50. Right? No, I don't even know what 2% of my net worth is, so what do I do? What? No, I can't. I got, you know, because remember also, there's something else. When you run an organization like I do, and you've got, you know, 75 people trading for you, and you've got, you know, 50 upstairs traders for you, and you've got all this mishmash, sometimes you're just playing, you know, defensive. You know, just trying to play, you know, just trying to keep everybody in line. You know, you're looking at an excuse for buying things, okay, just because everybody's short. Or you're looking to sell things just because everyone's long. You know? Okay. There it is. This is the first 2 weeks of the year. We do this study for the first 2 weeks of the year in commodities. We do the same thing in stocks. Like a longer-term opening range thing. If you look at the thing, there it is. So, for instance, there are a couple of stocks here, okay? We use a pivot from first 2 areas. We give you the A value. We give you the A up. If you look at it, some of these stocks have made A ups from the beginning of the year and have never looked back. Other stocks have made an A down and have never looked back either. Okay? We give you all of it. It's all there. And if someone wanted us to do this, okay, obviously we wouldn't add it to this sheet necessarily the first 2 weeks until the next cycle, but the other ones are pretty easy to do. Go back to the Lewis. Energy change.
Who wanted the Texas Instruments?
Oh yeah, was the guy here from TXU? Is he still here? May 12th. Change in trend in TXU. Okay, so you can send Joe and me a tuna fish sandwich if TXU has a change in trend plus or minus a day on May 12th. Okay, we're telling you plenty of time in advance. TXU is trading 16, 15, 18. 19. Really? Down from? 45. And the low was?
53, and the low was 10.
10. Ay. How many accounting scandals do you have? Tell us the truth. Do you know Andrew Fastow? Okay. Go back to, okay. So it's all there. Go back to future source. Okay. Okay. You know, and in my opinion, we're probably gonna get stopped out of shit because it's here too long. So we've got, what time is it? 3:35. And if we don't get above 9:16 and a half by 3:45, I'm getting out half the trade. Too late in the day, whatever the case may be. Okay. Again, time. Okay, I've given it probably more time than I should have just because you guys are here. Okay. In fact, you know what? Call Mike up. Okay, get rid of this page. Here we are. God bless Mike. Mike.
Hello.
Mike.
Yes, Mark.
Sell 50. Sell 20 S&P at the market, cancel, reduce the stop to 30.
Sell 20?
Sell 20 bigs, market, reduce the stop to 30.
Yes, sir.
Goodbye. Hang up. Again, time. Right? This thing is giving too many people the opportunity to get in near the same price level I got in. Right? I'm not stopped out on price. I'm stopped out on time. Okay? Did I lose a lot of money? Lose a handle. Handle, nothing. Okay? Next question. Anybody have any other questions? Oh, you asked questions about these seminars. Here's what happens. We have a pretty busy schedule.
Back to the website.
Okay? Because what I do is, We teach a group of summer interns. We're already full this year, okay, for that, okay? I teach the class to the 9th graders, which my son's involved in. We probably teach one other seminar. We're probably going to try to do this year one seminar on our own, if we get enough people, probably in New York, maybe here even, if I can get enough people here, okay? How are we going to go ahead? How am I going to get my pound of flesh from everybody for that seminar? I don't really know. I don't really like charging people for seminars. I don't know how I'm going to do it yet. The website, okay? The website speaks for itself. In my opinion, there's no better website in the country, okay? We've got the best. There's no way that you can get this amount of information, okay, in such a concise format. There are basically 12 hands on this website every day, okay? You know, if you call my Long Island office, which I will not give you the number, okay? If you call there at 11 o'clock at night, there's always someone there doing the last minute things for this thing. If you call 7 o'clock into my office in New York, okay, Lewis or Gutan are there because they got to input these things. Joe wakes up at, what time do you wake up in the morning? 5:30, 6 o'clock to do the playbooks?
About 4:45.
4:45 to do the playbooks, right?
Feed the dogs.
We feed the dogs, okay? So the point being is, this is a hands-on system. And the reason why I do it is I don't care if any of you subscribe, okay? Actually, I want you to be, I'd rather you become converts to the way I think. Because if you do, the more people who think the way I think, right, the more momentum I get in my trades. You know, I did the same thing with the floor. I got them to all be, converts to the way I think, and it gives me a tremendous edge. So if you walk out of here and you decide this is useless, I'm upset. If you walk out of here and you're going to use some of this in your own way and decide not to do anything with the website, that's fine. I don't need $149 or whatever Lewis charges a month. Okay? Believe me, and he'll screw it up. If you do subscribe, you'll get a check. Where's the check? It came back to you. It's like a who's on first thing in my office when it comes to that stuff. Okay? But the point being is, okay, I'd rather go ahead and get people to think the way I think. Because the more people that go ahead and do this, it becomes like a self-fulfilling prophecy. You know? And that thing. Lewis, turn back on the thing. Let's see if we can fill them the 20 lots. 14:30. We probably get filled right here. Okay. 14 and a half. Call him back up. Get him back on the phone for me. Mike.
You sold 20 and 9.15 even.
Ooh, that's good. Okay. Sell me 10 more. Mark it.
Sell you 10, making a 20 lot stop.
Yeah, thanks.
All right.
Hang up. Okay. Why am I doing this? Time. Instead of hoping. Don't tip there. Right? Time. And so you see now I'm paying more attention to the screen than I was before. And the reason is because I have a loser or nothing, a small loser. Okay? Okay? If it was a winner, I wouldn't even put the screen on. Okay? Because I want exactly what we talked about there. Be very impatient with your losers and be very patient with your winners. Okay? So if I had the time and if this was happening and I wasn't with you guys, okay, and I had bought 50 S&P at 9.16 on average, I think that's the average price, right? 9.16 including the other ones?
Yeah.
Yeah, 9.16 on average with everything, or maybe a little cheaper than that, right? I'd probably be out going, getting myself donuts and pizza and everything else. Go ahead. I go ahead when it comes. I look at the playbook sheets. I know that I know that I would want to take some of this position home if it was a good point C pivot. I know tomorrow's a number day, so I wouldn't take home as many as I normally would. Okay. I look at the playbook. I look to see if there's any levels that are pivot on gap days above. Okay. If there are any prior areas of this one, I want to see if anyone's going to talk tonight. Bush landed successfully, right? Okay. But I don't scale out things. Okay. All I want to do is exactly this. If I take a little jab here and I lose whatever, nothing. 10 grand. I mean, 10 grand is a lot of money in reality, but in terms of trading, it's nothing. To me, you can't trade a 50 lot and worry about 10 grand. What?
In the back of your mind, you're getting out because of the employment mark?
No, I'm getting out because everybody can get in at the same level I do. The market is not making people pay a higher price to get in. And if it's sitting here too long, I don't want to be in. Okay? Yes?
I work on overnight risk.
Overnight risk. Go ahead.
That's the best trades to make on the late day sequence.
Right.
So let's say you put this trade to the side. It's like once in a blue moon trade.
Right, but this is not a once in a blue moon trade. Point C pivots happen more than right. Right. Wait, but point C pivots are not that. They happen quite often. They're not that as late day. Right. Yes. Right. Because what I do is, I know those trades have a 70-30 edge my way. And normally what happened is I would have day traded part of the position and made enough money day trading because I already was long during the day on that C-up that I don't take home the full position. I probably take home 60% or 50% of the position I have on. I got to have before the, so now I keep the other 50% because I already banked some money, okay? And then on the other hand, if the market opens lower the next morning, or wherever the market opens, I'm out on the opening, okay?
You wouldn't have a stop at on blowbacks overnight?
Depends on the commodity, depends what the reason. Obviously, if God forbid something happened, you know, it wouldn't be a stop at. If something happened, I would, okay? You know, if something happened, I wouldn't have to stop at. I would normally just get out. But on the other hand, you know, if it's in a marketplace that, you know, doesn't allow me to stop myself out too readily, I wouldn't do it. It depends on the market. Yeah.
Do you use overnight ranges?
Yes. We do that, but we do that in the advanced class. We use overnight ranges because we create overnight pivots, and we do that in conjunction with daily pivots, and we do that using the overnight Globex ranges for S&Ps to see where the extremes are, where the pivots are, where the meat of the market has been overnight, to see if there's any, you know, latency to what London was doing in terms of, in terms of this. But we didn't do this in this class for obvious reasons. Next.
I got two questions. One is, I think, I don't have it in front of me, but I think the number line was turning positive with crude oil, and then it dumped today. It didn't make it all the way down to a late point C.
No, it didn't make anything. It was basically, if anything, it was...
It went down below the opening.
Right.
26 was the bottom of the opening range.
Right.
Right. Right.
But it couldn't go, and it couldn't go into...
Right, it was basically a dead day.
Make the 38%.
Right.
What it almost made,
Right.
yesterday.
Right.
And then, but if it had dropped today, let's say below, which I think...
Below 2580.
Below 2580.
Would have been a C, with 25, that would have been a C, point C pivot.
Okay, then, but the number line is still positive. Is it irresponsible?
Well, let's look at it. Go put, Lou, put up, where's crude oil? Go to the crude oil number line. Lou, what are you doing? Who knows? You don't know?
You just passed it.
Just pass it?
No, Lewis.
Keep going.
Keep going.
Keep going. Keep going.
It's the last page, Lewis.
Stop. The number line is 12. Okay, you see that today? Here, I'll use this thing again. God, I got to use this again. Okay. The number line is 12. Everyone see that? Okay. 30 days ago, I'm losing a -2. See that, Mark?
So the train's out of the station.
And train's out of the station, so here's what happens. I got a -2. So if today's a 0 day, even though the market basically did nothing today, okay, this number line is going to get better. Because dropping a -2 is going to make this a 14. Probably the number line is going to get a -1 today because it's probably a failed day up. If you look at it on a longer term basis, the way we do it. So this number line is going to go to 13. So even though in terms of the perception of the marketplace was that it was a failed signal, okay, in terms of this train pulling out of the station, actually I'm picking up more momentum. Okay? We'll go back to the S&Ps. Because how many we got left? 20? We sold 30, right? Yeah. 9:14. We'll wait. What time is it? 1:45. All right. Let's just see if the ads come back for the last 20 minutes or not. Okay. Ready? So anyway, that's what it is in crude oil. Okay. So what this does is this is completely contrary to the way people think. You know, you would think today was a bad day for the market, relatively. While to me, this is a neutral to a slightly positive day, just the way the number line reacted. Next question, yeah.
Did you look at gold?
I know, you got this thing with gold. Okay, we'll look at gold. Gold was not a pivot first hour low. We discussed why this morning, right? Gold settled back at 342.20, correct?
Settled at 342.40.
Sorry. I'm up by 20 ticks. Okay? I'm up by 2 ticks, right? It settled below the A up, yes or no? Do you know that, yes or no?
I don't know.
Why don't you know that? Go to the website, go to the thing, look at your hand. Well, I don't you see, the A value in gold is $3. See me, we're not open for the rest of the day. Okay, wang it. Okay? Okay? Okay, the A up in gold is $3, the A up was 343. What did the guy, he said 343.40 this morning, right? The market sold below the A up.
No, 342.40 is the A in gold today.
342.40?
And it made it.
Okay, and it's still right there.
Yep.
So, I don't know. I mean, if anything right now, let's go to future source for a second.
Stalled right at a gap.
Let's go to future source. Lou, go over here, hit screen, go to the daily chart. Go to daily, good, Lou. Now hit GCM03. Lou.
G.
2. Okay? Okay. Look at the moving averages. Are they all starting to turn up? Let's see. The yellow one, is it up? Yes or no? The blue one, is it starting to go? Yeah. The red one, is it starting to? Oh, you're not sure yet, right? Well, if the market consolidates here for a couple of days, what's going to happen to that red line? Nah, maybe. What? Is it going to flatten out or is it going to go up? When all three of these lines are positively sloped, I would look to go ahead and try to, this trade is actually setting up, you can see it, the way the lines are set up. Which is the yellow is the 14-day, the blue is got to be the 30-day, and the red's got to be the 50-day. Okay? When these things trade up, okay, and if the yellow gets up here and gets above these two, just because it should happen anyway, although it's not necessary, and the market has some kind of pullback where it gets below the yellow line, but not below the blue line, okay, this is probably setting up for some kind of moving average fake out someplace in here a week or so away from now. So that's probably another trade we're going to look at. Especially if the number line, what's the number line in gold? Anyone have the sheet? Look at the sheet for day, what's the number line for gold? There we go. The number line for gold is 0, right? You have a +2 today, you're throwing out what from 30 days ago? 0. So you get, we just basically,
Where'd it go?
Lou, what are you doing? Here we go. See, this is what happens. He takes his medication. Okay? I say, Lewis, take your afternoon dose. No, it gives me headaches. Unbelievable. Okay. So the bottom line being is, okay, we're at 0. We reset. Okay? We're going to get the +2. You can see it actually happening. In about a week or so from now, you could have a situation or a couple of days where the market goes to a +9 from 0. We have all three slopes going up, right? We have the market where, in a pattern where, you get a moving average fake out with a low risk entry, and I'd buy it again. Okay? Go back to the, Lewis, go back to Future Source for a second. Go back to the main page. Good. 9:15. All right, we'll wait. Might as well wait at this point. We sold 30 lots out right in here. Good. Go back to, okay. So that's that. Next question. Yes?
On your 30-day event cycle?
Yes. It's 30, wait. It's 30 trading days. So if you have holidays, okay, you've got to throw out those holidays. Let me show you an example of what we do with a holiday. Okay? When was the last holiday we had? What day was that? What are you, an echo now also? What was Good Friday? The 18th? Perfect. Look at this. We were closed on the 18th, right? Look what happens here. 4/17, 4/21. Right? The day skipped because of that. And for instance, everything was closed in London today. So tomorrow you're going to see all these being, this one's going to be 5/1, but all London's still going to show 4:30 because that's the last day. Again, the reason why you need to keep track of that is because it's that 30-day event cycle. Yes?
The significance of that is basically predictive of volatility versus non-volatility.
Yes.
That's all it is, not direction.
Not direction. Although, that's not true. If a minus day sets up and 30 days ago was a minus day, you're looking for a minus day to replace a minus day, which is an opening range above the pivot and the pivots below the close. Right. Okay? Next question. Yes?
Do you use relative rate sizes to filter size?
In English. Again, when you start using relative, what do you mean?
The difference between your range size today or the pivot range size today affect the significance of whether you take a trade or...
Sure it does, because if I have an opening range, like we said, that's 80 cents wide in crude oil, how can you use this thing to make low-risk raw trades? On the other hand, what I'm looking for is, a trader's dream of this stuff is narrow pivots, narrow ranges, okay, good setups, high reward, low risk trades. Wild opening ranges where you got to buy it here and risk all the way here. Even Goldman Sachs wouldn't do that. Okay? Yeah. Next question.
You don't care about volume?
Are you related to him? Go ahead. Have I mentioned one word this entire class? How many hours you been here? Okay. Have I mentioned one word about volume this entire class? Okay. Yeah. Richie, what's your question? Sure. Go back to the number line page. Wait for 1 second, Lou. Go back to the thing. I gotta see if I gotta get another 10 of these. 9:15A. Woo! Maybe we'll keep them. See what happens. Again, you know what happens? If the market now rips in the last 20 minutes, did I make the right decision? did I get out of 60% of my position because every yo-yo, okay, was there, right? And if these 20 lots go up, mazel tov. Okay? And if it doesn't go out, do I look like I care? The reason why I'm so confident, the reason why I don't care about money is because I'm making the right decision. Okay? The people, how many of you know why people lose so much in Atlantic City? Who's lost money in Vegas? Why do you lose? First of all, tell me, you're Pete. How are you related to Pete?
I'm his brother-in-law.
You're his brother-in-law. Why do you lose every time you go to Vegas?
Will they give it back after I win it?
No, because you go to Vegas. You go to Vegas because you go there, okay, to have fun. If you're not Pete's side of the family, the other side, so you don't go for the reason. Okay, but the point being, when you go to Vegas, right, you want to win. You think you deserve to win money. You think you need that money, right? That $2,000, that $1,500, you need to make money. If you need to make money, I got one word for you. You ain't making money. Okay, if you need something, okay, in terms of money at least, you ain't doing it. Okay? It's the same thing as trading. Okay? If you need to make money, you're not going to make it. If you need to trade, you're going to lose. Okay? It is that simple. Okay? That need, it's got to be, I'm in business. If I see a good opportunity, I strike, like Warren Buffett. Okay? All those Dynages and all those things that he picked up, what do you pay for that stuff? $0 on the dollar. He's already made, from what I understand, he's already made 100% return on his money. Right? Why? Does Warren Buffett go out and say, does he go to the market? Does he wait for it to come to him? That's why he's the richest man in the world. Okay? That's a secret to success. He doesn't need to make money. What? You only trade to make money?
No, all the traders, they don't need to make money.
All the traders don't need to make money? Sure they do. But he's got so much money. The guy's worth as much as he'll. Yeah, but I'm saying I'm not saying that you don't need to. I'm not saying if your primary motivation is that you need money, you will never make money. If your primary motivation is to make money, you stand a chance. But if you need it, you ain't going to make it. Nobody goes into Las Vegas with their last $1,000 and comes out with $1 million. Doesn't happen. Even in the Disney shows, it does not happen. Okay? Okay, where are we?
916 half.
916 half. Okay, so we're still long 20, right? Where are we? By the way, I'm going to keep these 20. Well, probably 15 of them. Yeah.
What if you're AF and then the price stays and you get out for the time?
Right.
Do you ever go back in or?
Only if I get another reason to. Depends what happens. Do I make a sushi roll up? Am I making an outside up week to the upside? Is there something that comes out in the marketplace? I'll give you an example. I buy crude oil. Okay? I buy 200 crude. Okay? Or 100 crude, whatever the number is. I don't know. If you're trading 50 S&P, it's probably 250 crude, right? 5 to 1, 4 to 1, whatever. 200 crude. You buy 200 crude oil. And you buy them on an A up, and it sits around, so you sell out like I did. 50% position, you got 100 left. Now the market starts to go, right? Up. And then Newsborough comes out. Nigeria. They let the 150 people go off the dock, where it is, and they're resuming full production. What should happen when that happens? It should shoot up. Nigeria is resuming production. Everyone's saying, "What? Give peace a chance." What should happen? So if it shoots down, what happens if the price doesn't go anywhere? What happens if the price actually just sits there and for some reason starts to rally some more? What's that an example of? What's that example of? Bad news for the market, good action. Then I buy more. Okay? Yes? Well, okay, I'm sorry, Richie. What was the question? Okay. GSI, we just look for divergences. So if, oh God. Are these the things that you're not supposed to point in people's eyes because if you do? Really? Okay. So anyway, here we go. What the DSI is, you look for times where the market goes one direction, the net change, and the DSI goes another direction, and the market has a gap the next day on the opening, and you want to go ahead and try to go ahead and make a trade in that direction of the gap, okay, risking to an A down, thinking that people are caught. The bigger the gap, the bigger the trade. The bigger the gap, the harder it is to make the trade, but that's what you want to do. DSI divergence. Okay? Rich, does that help you? It's all in the book. Just sit there, go to the toilet tonight, take your tux, and just You'll be fine. Next person. Anybody else? Yeah.
Trading across the asset classes.
Oh, don't give me a Goldman asset classes. Here we go again. Asset classes. This is go ahead.
If you start to get too many buy signals in currencies, let's say,
Right.
and you start getting along a lot of currencies and short the dollar index, do you look at that and think, you know what, I got too much FX risk on right now?
Sure you do. You're not going to go ahead and buy. You're not going to go ahead and buy the Swiss franc, sell the dollar index, buy the euro currency, buy the Danish krona, buy this, whatever it is. You're not going to do that. On the other hand, what is good to do is if I'm going ahead and trading, and all of a sudden, you ready for this one? I call this a power trade. Call Louis in Long Island. Where's Louis? You know what I had a nightmare of last night? I had a nightmare that Louis, instead of dialing Long Island, was going to call one of his 976 numbers. And we're going to get some woman on the phone. Louis, is that you again? Come on. All right? I was like, oh no. Because, I see the phone bills in my office, and I say, what the? I see from the computer, I go, what are they doing in there? But he does a good job, and if that's what he needs, who am I to say anything? What?
Speaking.
Oh, you're on.
Yo.
Louis. Yo. Yo. Louis, this is not that. This is not that. What commercial is that? The Visa commercial. Louis.
Yes.
Couple of questions. We're going to talk about power trade now. You ready? This is a system that we use. How's power trade work this year?
Unbelievable.
Okay, here's what we do. Ready? I'm going to give it to you. Because you know what it is? It's not hurting me. Again, the more of you that become disciples or use this in your own way of thinking, the better these trades are going to work for me. Okay? Here's what we do. If the DAX and the CAC and the FTSE all make A downs before New York opens, okay? So again, you get all these asset classes. Oh, I hate that Goldman Sachs word. Okay? All these individual asset classes, the same thing, all making A downs and all showing weakness before New York opens. And now New York opens. Okay? And New York within the first hour, that makes an A down. Right? At the end of the first hour, Louis, right? That's when we do it?
That's correct.
At the end of the first hour, this thing's on A down, and all of them are on A down. What do you think you should do? Buy? No way. Sell. Goodbye. Just for that day. Because you know what? The whole world's going, bleh. Right? On the other hand, if Brent crude makes an A up before New York even opens, and then New York opens, and New York makes an A up, and is on a good A up after the first hour, and gasoline, because we traded in season, okay, is on an A up, right? Okay, so you got all these the three components: Brent crude, New York crude, gasoline. If it's the wintertime, it'd be heating oil, and all three of them are other things. What do you think you do at the end of the first hour? You buy it, and you buy more than you normally do. So again, yes, I don't buy Brent crude, gasoline, and crude. I'm going to buy the one that I think is going to give me the biggest juice, okay, or the one that's the thickest, and just go with that one. Louis, did I describe this right?
That's correct.
Okay, that's what we do. So again, I'm not going to have, a smorgasbord of, we'll have 1% of my assets in this, 2% of this. But for a day trade, for a 3-hour trade, those are the greatest. Not as good, okay? And there's a trade that you can go ahead. You were worried about overnight risk. There's a trade you can close it out at the end of the day. Okay? Okay? You can look at the currencies. Okay? If the euro currency makes an A up before New York opens, okay? If the Swiss franc makes an A up before New York opens, if the pound makes an A up before New York opens, right? And then at 8:20, the Canadian dollar makes an A up against the dollar. And then the dollar index contract itself, which is based in New York, makes an A down. What do you think you should do? Right? It's all happening the same thing, right? All that really is money flows. Really, all that is money flows. That's telling you that there's a tremendous amount of money flowing into something or out of something for that day. I'm not going to hold it overnight, all these different things, but for that one day, that's how you run in Goldman Sachs, or at least their customers. Okay? Louis, go back. Where were we in future source? 1 second. Go back. 9:15. Okay. What time is it? 5 after 4? Whoa. It's okay. 5 after 4?
4 o'clock.
Okay, we're going to call you back. Go to Mike. We'll call you back.
Okay.
Hold on. Put the screen up because I got to see what we're doing here. Mike. See again, same place, hasn't really gone anywhere. Didn't stop me out, this one, right? Trade's no good. Mike. You don't have a dial tone? Here we go, cell phone. Always carry a cell phone. Let's see, does it work? 2 missed calls. No. You know what? Call back Louie. You lost the phone dials altogether? Okay.
All right.
Mike,
Yes, Mark.
how many S&P we still on?
You are still long 20 lots.
Sell
No.
10. Make the stop 10 only.
Electronic will not reopen.
What?
Electronic is not going to reopen. It's closed indefinitely. I'm selling you 10?
Sell 10. Make the stop 10 only.
Yes, sir.
Okay. Again, time. Right? I gave it every bit. I gave it too much time, to be honest with you. But I did it because I was hoping that it was here. I'd be able to impress you guys. But you know what? I'm not. Again, I'm trying to go ahead and tell you the right trades. Okay. Next question. Yes.
Mark, there's something I sometimes look at, open interest changes in the futures if they're big, like on a daily basis, and occasionally a commitment of traders report. Do you ever look at that?
I look at the commitment traders. I definitely look at the commitment traders. I do not look at open interest reports because open interest is always masked. Because you never really know if you're a Paul Jones speech, you don't know who really is who. Commercials can be doing because
If I see open interest in E-minis increases 50,000, and I know
that's usually me. We made a mistake. Don't worry about it. Don't rely on those. Okay, it was energy at least E-minis. But the point I'm trying to say to you is this: I don't really like to use open interest. I use the commitment traders because it gives you a good gauge of what the commercials are doing, right? You know what I'm trying to say, and the non-commercials to some degree. But the point is, open interest figures in general, just on a daily basis, it's too random. I've seen, as a clearing member, too many mistakes being made where open interest gets reported for some ridiculous reason. I mean, think about it. Mark employs, how many people work in your clearing department at Goldman? Okay, 207. Some yo-yo, on his way out hits an elbow thing and reports an extra 60,000, contracts to the exchange, both sides. You don't think it happens? Believe me, it happens. That's why I don't look at a daily change of that. But I do look at commitment traders. Yeah.
Why don't you just put in your A trades up and down every day without thinking about it?
We do. But that's a very small system. We do that. Louis does that in Long Island. We do that. But that's a very small piece because, again, an A trade in itself, okay, probably only has a statistical advantage of 3-4%. And after slippage and after commissions, it probably has an advantage of 2%. So what I try to do is we trade that small because it's still an edge. But I want an 8-10% edge because I told you. I'll admit again, I'm greedy. Okay? And I can go ahead and make better risk-reward trades than just your average A. What I'm looking for is why is this A different than all other A's? What makes this a lower risk, higher reward trade? Okay? Okay? If I want to, I can just trade straight A's, and we do in certain systems. Okay? We do trade it to some degree in bonds. We do trade it to some degree in gold. Okay? Actually. Okay? But we don't trade it anymore in S&Ps because there's too much random noise. Okay? In that. But we trade a lot of other systems there. There's like, you know what? There's like, I would show it to you, but you know what? Forget that. It's too late. Any other questions? Yes?
Time's important to you, but I notice you don't wear a watch.
You want to buy me a watch? Next question. Oh my God. Okay. Anybody else? Okay. Yeah. Good. See, now he's thinking like I want him to think. See, I've got a disciple, right? Where do I go? So if I buy a power trade, right? If I put this on at the hour, initially my stop is going to be the opposite side of the opening range, okay? Which is a lot of risk, okay? But I know these trades work. These have a good probability. If it doesn't go anywhere within an hour of the time I put the trade on, what do you think I do? I'm out of the whole trade. And I get stopped out of that trade more often for time than I do for price. And if an hour later it's going my way, it's just, what happens is, and that, by the way, I'll tell you what else I do in those trades. An hour after the trade's on, I raise my stop to what? Where I got in. It's done automatically. We trade everything that way. We trade things. I asked Louis, now what is this that you're trading? I don't know, but you can trade it, and it moves. So what is this? What's an AEX? You really want me to find out what I said? It would be nice to know something. Okay? Right? But it doesn't matter. That's the beauty of this thing. Okay? That it doesn't matter. You guys are power traders. You guys, some of you are S&P traders. It doesn't matter what's going to be the next hot thing. The best thing is, why I feel good about this is when I'm teaching my son how to do this, I wish we're not getting him on the phone because leave me alone. Okay. But the point is, when I get my son on the phone, who knows when it's time for him to make his mark? Okay. Okay. If if the S&P is where it's going to be at, or if it's going to be Brent crude, or Belgium crude, or the Brazilian real, or if it's going to be something in Russia that trades, or the Russian ruble, who knows? But you know what? The best part of this whole thing is you can adapt this across everything. It may be stocks, it may be currencies, it may be gold, it may be something we don't even know about. It may be some convoluted thing that Goldman Sachs makes up so they can make another $1 billion. Okay? Who knows? But it doesn't matter. Okay. Go back to the S&Ps because I got out of the last 10. What time is it? What time is it? What time is it? 4:05? Okay. Someone just remind me 10 after 4 we got to call them. Okay? Because I'm not keeping the trade because the trade didn't sell above the thing. Okay? Actually, I'll tell you what I'm going to do. We'll put the order in. Ready? Joe, this is the order I want you to give him. Ready? With only 10 lots left? Sell 10 lots MOC unless the market settles above 917. So if it sells above 917, it'll be a good point C. I'll keep them. Doesn't sell above 917. I'm probably doing this wrong. They'll sell 916.80. They'll sell them 20 ticks away. The market up 10 handles tomorrow higher. Big deal. Yeah.
Have you ever added to position because it's approaching the best trading?
Sure I do. Okay. Anything else? Because we're going to wind this down in about 5 minutes. If you have any interest in anything to do with the website, you can talk to Asha, you can talk to Lewis, okay? If you're interested in anything to do with seminars, I'm not really know what we're going to do the next one, but we're going to do it the same way. What we probably do is we go through this whole thing. We're going to go in a little more in depth. Obviously we're going to do it ourselves. So we're going to have one, to do this. The website, the customer thing there, it's up to you guys. I don't put any pressure on anybody. I'm glad you all came. I'm glad that most of you stuck it out. I mean, who's been here all 3 days, all 6 sessions? More power to you. That's a big commitment. Listening to me for 9 hours. My wife hasn't listened to me for 9 hours in the past 10 years. Okay. Anything else? Yes.
Based on over the years, you've refined these rules, gotten better at really knowing things. What have your drawdowns decreased to a lower level than years before?
You know when my drawdowns decrease? My drawdowns have been, and this is going to sound like a weird answer, the more volatile the market is, the lower my drawdowns are. The more dead the markets are, the higher my drawdowns are. Make sense to you? It's completely counterintuitive to everything that everyone does. Because when the markets rock and roll, right, this stuff works. When the market goes, all of a sudden, rock and roll, all of a sudden, dead.
So, for
dead.
example, I think you once said to somebody, maybe not here, that for a long time this did not work in the gold market. But recently the gold market got more volatile.
Right.
So I would assume it started to work again.
So what we did in the gold market is we stopped trading it for about 5 years, okay, because we experienced a significant drawdown trading gold in this thing because the market was like watching paint dry. Then gold picked up. We made back all the money, right? And that's it. Could you trade this in copper? Probably not. Could you trade this in live hogs? Who would want to? Could you trade this in pork bellies? Probably, but I'm not a one-lot trader. Okay? Could you trade this in oats? Don't trade oats. There's no movement. Again. All right? Could you trade this in the base metals in London? Absolutely. How much volume? There's a lot of volatility there, right, Mark? Okay? Could you trade this in the Australian dollar and the Canadian dollar, which I think are going to be the two most violent currencies over the next year? Absolutely. Okay? Okay? I have these crazy views about the Australian dollar and Canadian dollar, with their interest rates differentials being higher and everything else. I think there's going to be a lot of crap to do in those two markets. Yes. Last question, then my ADD said, and I got to take one of Lewis's pill. I'm done. Go ahead.
When do you decide to trade a market against the what vol?
When it comes to what I call it, when it comes to fish vol, not option vol. When I see that there's movement, when I see that there's enough liquidity, and I see that my average daily ranges are getting bigger. When I see that the fact that if I look at a market and start looking at, hey, this A was good, these things start working, point C pivots work, that's when I use it. Otherwise, no. Okay, last thing, and then that's it.
Well, sometimes we're wondering about a quiet market that all of a sudden makes a good C up to a pivot. It has to make
Once in a blue moon trades, those are good too. Okay, so if I took copper that hasn't made a C down in 8 months, and all of a sudden you were a customer of mine, and you called up my order desk and say, you know, I think if copper goes down, it's 40 more ticks. It's the first point C pivot trade copper's made in 9 months. Guess what? If you sold 10, I'd probably sell 100, right? And whatever you paid in commissions on the trade, I'd give it back to you. Okay. If anybody wants a book signed, you don't really want a book signed by me because I just write F. But if you want me to, I'll be happy to sign it for you. Otherwise, I want to thank you for coming, and we're done. Okay?